You ever heard someone say they just bought a G-Wagon because it's a tax write-off? They definitely have no clue what they're talking about, but let me explain to you how to actually maximize the tax benefits you get from using your car as a business owner. There's two ways you can write off your car expenses. First way is by using the standard mileage rate. This method is really straightforward. You take the amount of miles you drove for business purposes during the year and multiply this number by 70 cents per mile. That means if you drove 10,000 miles for business, regardless of if you drove a 2005 Corolla or a 2025 Range Rover, you're getting a $7,000 write-off. Now the second method allows you to depreciate the car on your tax return, which could lead to big deductions, but this has a bunch of limits you need to be aware of. If the car weighs under 6,000 pounds, the most you can write off in year one is $20,200. You'll have to write off the rest over 5 years. But if the car weighs over 6,000 pounds, you can write off the entire purchase price, even if you're financing it over time through depreciation. Hence the people that say they wrote off their G-Wagon, which weighs just over 6,000 pounds. But you can only deduct the percentage that you use the car for business. So if you only use your car 70% of the time for business, you can only depreciate 70% of the car. So if you buy a $50,000 car, you use it 70% of the time for business, you can write off $35,000 in the first year, even if you're financing it and paying it off over time. Additionally, you can't just use a car 100% for business the year you buy it, write the whole car off, and not use the car for business again. But if you accelerate the depreciation to the first year and then use the car for business less than 50% of the time in future years, you'll have to recapture that depreciation you took as income. So depreciating your car only works if it's truly going to be for business a majority of the time. With this method, you don't get a deduction for the miles you drive, but you can write off a portion of all the gas, repairs, and insurance that you have during the year. Again, depending on how often you use the car for business. Now remember, the amount of tax savings you'll get are still much less than what you'll actually spend on the car. Tax savings help tremendously, but don't buy a car just for the write-off.